Hold on. 3, 2, 1. Go.
Good morning, everyone. Welcome to the 7th episode of DLT Fridays with my co-host, Gordon Einstein.
It's actually 8th.
8th. Oh, someone has to correct me at all moments. I cannot have a conversation.
Look, you say my name correctly. You didn't name me after the guy who didn't kill himself in jail. So
if you were smart, you just put your damn name on your shirt. God. All right.
My name is Nostromo.
You're in the capital game and you can't count. Uh-oh.
Exactly.
All right, let's start this over. Welcome to the most high energy show in crypto and blockchain. It is DLT Fridays. Good morning. It is 6 a.m. in Los Angeles. It is dark out. It is raining, but nothing will stop us because I'm here with my co-host, James Haft, my favorite co-host. I can't wait to see him and hug him because he's in a cold place and he needs some warmth. And we're happy today to feature two all-star guests. David A. Johnston with a T. Yes?
Hey, guys.
Hey, Mr. Dapp, we'll have you introduce yourself in detail in a moment, and we will talk about the posters behind you because we have to. Marco Aniballi. If I'm saying this correctly, I think I am. My man.
Gordon.
Good morning. You know, we were just on an hour and a half legal call, and here we are. Different Zoom, same vibe. Let's dive into it. James, my good friend, I'm going to pass it back to you for the subject, and we'll launch.
That was great.
Also, and of course, thank you to the invisible Jane behind the scenes, the woman without whom nothing would happen. And I know that because when she's not available, I don't hear from James. James, go.
That is the understatement of the century. Trust me. Yes. So guys, so glad to have everyone here. Thank you for joining us for this Friday. Today, two great guests, as Gordon said. Today, we're going to talk about money. And I don't really even want to put more qualifiers on it than that. I just want to talk about, what is the role that money plays? Why is it important? How has it changed? And why is this whole new digital economy important relating to it? So just briefly introduce yourselves, 2 sentences or less, so we can kick off the conversation. David?
David Johnston, Managing Director at Yeoman's Capital, all about decentralization, and been in the Bitcoin game since 2012.
Marco?
Marco Aniballi, Managing Director at Blox, all about decentralization and changing the planet.
So David is not wearing his typical T-shirt. I thought he only had one T-shirt, actually, which would say, if it can be decentralized, it will. Right? What's the exact
Everything that can be decentralized will be decentralized.
Thank you. Okay.
I coined that on stage with Vitalik in 2014 in San Francisco at Coin Summit, and then somebody tweeted it out, and it became a thing. So,
and I got to throw it, James, your choice of topic just got massively relevant with, I'm sure, what we're going to talk about GameStop. Wow, I just kind of.
Well, no, it's not irrelevant. My concept, if everyone could just stay awake, and when I talk about it again, is everything's fractals, and
and let me point out, Gordon, you're Gordon, you're 90 minutes behind reality, my friend. You may not have heard.
I may be 90 minutes behind reality, but your internet needs an upgrade, my friend.
Last 90 minutes.
No, I'm thinking what's happening is the NSA is blocking him from saying something that might be inflammatory.
Exactly. And I think what he was saying is that Elon Musk posted that his.
No, of course I thought that. In retrospect, it was inevitable.
Exactly.
Give me some credit, bro.
But talking about everything being fractals, what's happening really is that there's no difference between a digital token that represents value and a stock. And it's all those people who represent legacy positions and jobs and regulators, and who think that they understand better than everybody else, and who pretend that their job is to protect others, right? They're all out there trying to claim that the difference between stocks and digital assets is some level of regulation or protection or logic, when the truth is they're both just markets, and markets are markets whether you like it or not, and it doesn't matter what the underlying asset is, because people are the participants in markets, and people act the same in the face of opportunity. And so what's happening with GameStop, is the same thing that's happening to Dogecoin, is the same thing that's happening to Bitcoin, is the same thing that's happening to gold, right? Mm-hmm. And so I think so David, talk about, you're saying 2012, you were looking at decentralization. What is it that's been fascinating to you about money and value over the last 10 years? What's happening that's important?
So, I mean, honesty is the biggest thing, right? Like you go down the rabbit hole, and the reason F.A. Hayek is hanging out over my shoulder, right, is because I'm a free market economics nerd, right? And, you know, after having gone down that rabbit hole and realizing that the current money that we use is not honest, you know, and is extremely opaque in how it operates and everything else, you really want something where you know the number of units that exist and the number of units that will exist, right? And so even in 2012, seeing Bitcoin, it was like, oh, wow, this is a transparent, honest system, not run by centralized gatekeepers. This is really important, right? I'm going to turn my green pieces of paper into the first time to something that I can hold and I can custody and can never, you know, sort of be taken away in the sense that, you know, nobody's going to arbitrarily inflate away my value. And so that was the genesis. And from there, you're just saying other people are going to make this realization. This is fundamentally correct. And other smart people will make similar conclusions based on that evidence. And that's what we've seen in the last 8-9 years since 2012, is that playing out with more and more millions of humans, right, getting wallets, going through that learning curve, and then coming to the same conclusion, right? So, and then if you want to talk about moneyness, like, you know, does it meet the criteria of how we think of money? It's become more and more a money, as in highly liquid, highly, you know, it's always been easily to transfer anywhere in the world, but now it's extremely liquid in the context where billionaires are tweeting each other, oh yeah, it's easy to buy $1 billion worth. I'll tell you, in 2012, when I was buying Bitcoin, it was not that easy. I could get about $500 a day worth. You had to send money to this Japanese exchange that, you know, was kind of shady, and maybe it was going to lose all your money. And you had to do it via MoneyGram on a red phone in Walmart. Like the wonkiness and the limits and restrictions of liquidity back in 2012 were pretty extreme. And you were having to, you know, pay all of those early adopter, you know, frustrations and frictions in order to get in. But you're basically betting, hey, these barriers are going to fall over time, where now somebody calls an OTC and they can move $1 million, $10 million, and it's nothing, right? Oh, you pay 5 bips for that, 10 bips for that, right?
If you don't mind, I'm going to jump in here, and I'm going to try to bring this into a discussion about money, because one of the biggest fallacies sitting out there right now is that Bitcoin is money, or that Ether is money, or even Tether is money. They aren't. They're assets. They're like a stock. They're like a commodity. They're things that have value that are more or less fungible between each other, depending on what market economy you're dealing in, right? Is there a market for it determines its fungibility and its liquidity. As you've pointed out, David, the fungibility and the liquidity of Bitcoin has gone exponential over the last 5 years. And agreed, no argument, but it's not money. Not in the sense that I think we need to discuss money. What is the future of money? Money is, and this occurred to me literally, funny enough, the morning after Jane said, what should we talk about? And I suggested we talk about stable coins, and she came back with future of money, and I said, done. And
Go Jane.
Go Jane.
Go Jane.
But the 27th in Davos at this World Economic Forum, some guy got up, and I can't remember who he is, but they published his speech on a PDF, and it showed up in my newsfeed, and I read the whole damn thing. And he sounds very impressive. He's a very economically savvy guy, and a monetary policy savvy guy, and a central bank savvy guy. And all that says to me is he's in the legacy system, and he likes where he is. The problem we have right now is that people have forgotten that money isn't an asset. Money is how you barter assets in a much less troublesome way. We are currently bartering Bitcoin for US dollars. We're bartering Ether for US dollars, or we're bartering Ether for Bitcoin. It is much more liquid than having to go down and say, I've got a cow, you've got a horse, what's the exchange rate? But it is still we're still bartering to a degree. And in fact, when you got started, David, that was all it was. It was barter. Money makes it easier for those things to happen, right?
James, you got to let me.
Yeah, what I've always, it's quick, Gordon. I've always said to people that Bitcoin is the hedge against the dollar. That when you buy a Bitcoin, you tend to be shorting the dollar. So when you see all these flows right now, people talk about the rise of the Bitcoin. What I see it is as the reaching of equilibrium at the true valuation of what the hedge of the dollar has to be, and the movements in Bitcoin directionally show you the confidence and which way confidence is going in the U.S. dollar.
Okay, yeah. I got to do it, Marco, and hear me out, and then you're responding. I'm abandoning moderator host role. Okay, I completely disagree with you. Okay, I think
Jane, hit the mute quick.
Come on. I think money or currency more specifically, is a subclass of a bigger class called assets. That's number one. Just because, and things can be supersets and subsets of each other. Currencies are certainly.
Gordon, I'm not disagreeing with you. I agree.
Hold on. Okay, also, the idea that a commodity can't be money is throughout history absolutely wrong. Okay, highly fungible, tradable commodities have always served as money, whether it's gold, whether it's cigarettes, whether it's beaver pelts, or whether it's whiskey or salt. Yeah, good example. The benefit of having what I would call, I'm going to use this intentionally, an untethered commodity, one that does not have a consumption value also, makes money better because it's not the value of it's not being warped by consumption. But of course, when we had it by government fiat, it was prone to corruption and inflation by choice of human. When you have mathematically restricted emission, you're solving the problem that going off commodity money created. There is a limited supply of gold. There is a limited supply of whiskey, especially when I drink it. There is a limited supply of cigarettes. I mean, cigarettes are a currency in prison. Okay, and they're used for it. Yeah. Okay, so
are you gonna let me finish now, Gordon?
Well, you did pause, so I'm responding.
I took a breath. I'm sorry.
Yeah, don't do that.
There was a closure part to what I was going on about. Fine. When I said that money, in terms of what you consider a base money, yes, you're right. Historically, we have used salt and everything therein. We've used grain. We've used seeds as currency. We use as currency. Currency is an asset.
Yeah.
Money is not. If you take it down as logical conclusion, you need to separate the concept of currency from money. Currency is an asset that is backed, has been backed by salt, seed, but the U.S. government, gold, or take the euro, for example, it's backed by the U.S. dollar, right? Those kinds of things
or it is that thing, not backed by, it is money.
Or it is that commodity. It's because the commodity is treated as money, right? It doesn't change the fact that it's a commodity, but we're also going to now treat it as money because everybody has decided we'll use that as money because it's easy. We now have digital ledgers, right, where they do not actually have to have an asset value to still represent value. And what my suggestion and this is one of my big passions, James, as you probably well know, is the concept of creating a money that is not an asset, but is simply a measurement of value that is consistent. Because the problem we have right now is you have the euro is measuring value one way, the US dollar is measuring value another way, and the Forex markets are basically people voting on which they think is the better representation of value at any given point in time. And then the US government dumps cash into the marketplace, and all of a sudden they've moved their ruler. They've changed 1 centimeter to make 1 inch. No one seems to care. But from a global perspective, I've got a problem with that.
Marco, time out.
Go ahead, Dave.
David, I want to give you a softball. Okay, Frederick Hayek on money, okay? Well, the best quotes I've seen from him, and I've been like Googling him like crazy, but talk about how he talks about the evolution of love, religion, and money, right? Love and religion have changed. Our concept of money in 300, 400 years since the beginning of the nation state hasn't changed, right? And what Marco's talking about resolving down to a ledger instead of a political tool, right, I think is one of the major points from Hayek, that we need to evolve the concept of money or the unit of account away from political towards its usefulness, right? So is that a good launching point for you, David? I don't know.
Sure. And, and before Gordon raised his hand and said, I have to rebuttal, that I was about to rebuttal. So, but I did want to hear out Marco's full point, because I agree with you on a lot of those items, that the ruler is the key. Is it an honest ruler? Is it a consistent ruler? And that's exactly the point, though I think we may disagree about ways to achieve that, right? So I saw a lot of proposals in 2012 and 2013. Oh, wouldn't it be wonderful if we could have Bitcoin, but there was no price volatility? Can't it just be a measure, with these number of units, but not relative to other things? And I haven't seen a means of achieving that, and I think
not in a finite supply.
Not in a finite supply.
You can't do it in a finite supply, no.
And I'm not convinced you can do it with an infinite supply either. I've seen a lot of experiments on that side of this thing. But what I would say is, there's the best term that I've come across the last few years is economic bandwidth to explain this. Without economic bandwidth in an ecosystem, you can't achieve all of this, sort of moneyness around, can I exchange this for that? Can I put this much money into the system? And that's more of an emergent property of the growing network effect, that, okay, now the economic bandwidth is $1 billion or $100 billion or $1 trillion. Now I can do things I couldn't do before. But, I remember proposals from, friends that were great cryptographers, and they're like, oh, these systems would be great if we just didn't need the token, right? But none of those proposals worked out, and all of those systems failed, because without that economic incentive to drive the behavior, whether it was mining or something else, and the emergent effect of that economic bandwidth in the system, it didn't work, because without that ability for the system to have its own incentives and tokens, it just didn't function, because people wouldn't just out of random action run all the computers and do all the things necessary for the system to operate. So that's kind of the perspective I'm coming from, is having seen those experiments play out the last 7 or 8 years. I think you need the economic bandwidth to continue to grow in all of these systems, and for the incentives to align where people get paid to do a particular activity. And I haven't found any way to support the ledger without those functions. I'll stop there.
Okay. So you're talking about the infrastructure component of a ledger and how you have to maintain it. Let me paint a picture, and the picture's goal is to see that the incentive is pure self-interest, no payment at all. No money changing hands. It's just pure self-interest that keeps you, as a person who decides to support this infrastructure, as a supporter. Think of let's take a concept, and please, anyone who comes up with, oh, that's just Libra. No, it isn't.
wait. I want to just say in advance, that's just Libra.
Yeah, thank you very much. Okay. The thing I'm thinking about is, if you have a algorithmic token generation system that sits there and waits for people to bring assets in, and it will accept any asset. It doesn't care what the asset is. It just accepts any asset. That asset comes in. It increases the value of the treasury of this ecosystem, right, by a certain amount. And a certain amount of that ecosystem's tokens are then issued to that person who brought in that particular asset value. And that asset value could be literally anything. We don't care. And we let the whole mix just build. And let's assume we go down 3-5 years down the road, and this has been going on, and you now have 75 different types of assets in this pool. And you can have relative value between all of them through just economic exchange. I mean, initially you're going to have to rely on things like oracles and whatnot, but eventually you get to a point where the trading value between these assets is known within the network. And your token value is always the total value of the treasury divided by the total number of tokens you've issued. And when someone wants to bring in new value, you already know what the exchange rate is for that new value. You issue that many new tokens for the new value coming in. And when you have someone taking assets out of that pool, you already know the exchange rate for those assets, so you just burn that many of those tokens and give him his assets. What you end up with is a measure that is guaranteed always going to be the same. You cannot mess with it. You can't add extra tokens to the ecosystem because you have to add value to the ecosystem for those tokens to get minted. You can't take something out of that ecosystem and reduce the value of the token. No, when you take something out of the ecosystem, the token value doesn't change at all. The just number of tokens reduces to match the value you extracted from the ecosystem. And if you don't have anyone, no one needs to manage this thing other than to support the ledger's ecosystem, right? The actual, creating of blocks.
The problem I have.
No. You don't. So Richard Ross here just saying, it's about asset allocation. No, do not do asset allocation. You let anybody bring any asset they want, and there's a rational way to determine what its exchange rate is, and when it comes in, that exchange rate applies to how many tokens they get. But once they've got them, fluctuations internally don't change the value of the token.
The problem. So I know a bunch of platforms that are working on it, and Anathema, which you're working on, and Axios Coin is trying to do the same. There's a bunch of platforms trying to do that. The problem that I have with that is that relativity is objective and objectivity is relative, right? So those valuations for those other assets that are coming in, they end up being based on exactly that system that you're trying to avoid. So I find those.
You're talking about like the Forex rates are coming from the legacy system, not the internal system.
What's the value of gold? I'm bringing this gold in. What's the benchmark for gold that then creates the valuation on the new platform?
Right. And guess what, James? Every platform needs a transition object, much like every kid needs a teddy bear. Right? We're going to have to drag the world. We're going to have to drag the world kicking and screaming from the legacy system into the new system, and it's already started. But it's going to take time before you can disengage the legacy systems. People have said to me, "Well, okay, fine. What happens, when you get to the end and everybody's using what we'll call, for argument's sake, the global coin for all their transactions because it's the most stable thing on the planet? Because when your currency goes up or down, it doesn't as much." Right? The modeling already proves this out. The point is that sooner or later, you do the same thing the Americans did in the 70s. You get to a point where the world realizes, I don't really care about US dollars or gold or anything else. I'm going to trade all of that stuff internally on internal price because I've already got internal price history. I've already got internal price discovery because so many people are using this token now as their baseline, the thing they pair against, if you will, in an exchange metaphor, that I don't need to worry about, what is the USD value of this thing or what is the, that will be a market-driven effect. It will no longer require an external feed, if you will.
All right, I'm gonna make Gordon happy here and go full QAnon on you. So
never thought I'd heard James say that.
Rumors of my MAGA status are slightly exaggerated.
Exactly, just slightly. We love you, Gordon, for it. So maybe economics is an incomplete science. Right? Maybe we haven't discovered everything about economics. Maybe historic economics are based on the concept of scarcity. And maybe they should be based instead upon how you deal with abundance, right? And so my view is that the tools that we're using to look at economies, and just like you were talking before about needing the transitionary element, I'm not sure that's true. I think that's true when you're dealing with scarcity, right? I think if you're dealing with additive systems and maybe new filters to look at these systems, I look at the new distributed ledger systems as being interesting because they allow you to in a granular fashion support and incentivize those people who are important to the creation and maintenance and growth of the platforms in which they're participating, and allowing that changes the concept of money and value and units of exchange and enables you to step away from those other aspects. The fact that we then have a need to compare it to other assets, I think is a different thing, just like you were trying to differentiate before between money and assets and currency, right? And so Let me throw that out there.
Well, actually, I agree with you on the concept of, the former economics were all based on the concept of scarcity, and that we need to move towards, it's not actually, you're never going to get to a world where abundance is the only form, right? You're always going to have scarcity of certain things. That's just the nature of the universe in general. But when you look at it this way, dude, really?
Earl Grey hot. Unlimited.
Yeah. Actually, there were
I'm not
several.
totally kidding. With digital goods, with the ability to rearrange atoms. I mean,
Gordon's going to now confess his love for Uhura. So
look. Marco's right in the sense, like, look, there's only so many gold atoms in the universe, and you're not going to change the gold atoms to other atoms, at least not in
exactly
an efficient way. And so,
yes,
even with perfect 3D printing, there is still scarcity. I actually think it's the opposite. I think that we're introducing into the digital world scarcity, right? Where it had abundance in the anybody can.
Now we're engineering it.
Now we're engineering the scarcity because we found it to be a necessary part of the system in order to basically monetize open source in order to create.
Let me throw one thing out there, and I want to dovetail on David's point, and then I'll be quiet and let you complete it. Scarcity has a function because when you have limited options and limited resources, it lets you allocate your capital most effectively. It has a price and informational function.
Yep.
So we don't necessarily want an end to scarcity, and I don't mean that it's like some hoarding individual trying to deprive the masses. But human efforts are not unlimited. So there's data in scarcity. There's data in prices.
Yeah.
We don't necessarily want everything out there.
No, that's an extremely important point. The price mechanism is highly undervalued. And if you don't know what the price of something is, you can't act in a rational way, right? And you can't incentivize production of things that are needed more, right? So, that's the whole thing that makes free markets work, is if we're allowed to have a price for everything, then an entrepreneur can say, oh, wow, people really, really, really want more of those. I'm going to go make more of those, right? And so I agree, Gordon. I think that's really part of the puzzle here.
Well, and the thing about this putative platform I was speaking about, where the assets going in are any asset that has any attributable value, initially set by obviously outside influences, because this will start off obviously as a small thing and then it will grow ideally. When it grows, the bigger it gets, the more internalized you can make these value assessments, because the marketplace is growing and there's actually a market inside to assess the value. The concept is that the token representation you're using in this thing is still a fixed, unchanging measure. It is, there's a token for every unit of value. And as the units of value in the ecosystem grow, so does the number of tokens on a literally algorithmic basis. So what you're doing is you're taking away a lever from political control, because what you've effectively done now is you've said, I don't care what the value of the US dollar is. I don't care what the value of the euro is or the yen. I'm concerned with what is the total value of the world right now, which will always be growing. That is the one thing we can probably always agree on, that as long as there are people on this planet doing things, the value of the planet from a human economics, sociological economics perspective will always be growing. Our knowledge grows, therefore our value grows. So in one sense, this is James' ultimate expression, if you think, of abundance. There is an abundance of value out there, and we will always be creating more. But not all value is infinite, right? Some of those values are static. Fixed,
haven't we already done that, right? Haven't we already brought pricing internal? People in crypto on an exchange price things in sats, right? They price them in Ether if they're living in DeFi land on Ethereum, right? Some people unfortunately price things in Tether, and so you've kind of taken this internally, right? And you effectively have, you look at the numbers, there are effectively three things serving as money, or these common reserve trading pools right now, depending on the ecosystem. and it's Bitcoin, Ethereum, and Tether right now. Right, by far, they've got most of the volume.
But the measurement is different and fluctuating. That's the problem I have with money right now. What you want is a measurement that is not fluctuating over time as a measurement of itself, if you think about it, right? And the fluctuation of its measure versus all forms of value, not just one, is consistent algorithmically.
Okay,
so if gold,
let me throw this out here because I hear where you're going with this. That was the benefit. Okay, the benefit of going off commodity money is that you remove the reference object that fluctuated in price based on market conditions and need. That's why you went to an abstract form of currency. Fiat, if its emissions were controlled algorithmically, it would actually accomplish exactly what you're talking about. It's just that we learned that even if you're the German central bank, it will inflate just because of political pressure over time. So maybe to David's point, if Bitcoin, I disagree with the idea that a currency needs a reference object. Okay, a currency needs to be designed well and fulfill the usual things of fungibility, unit of account. You can make change, like all that other stuff. Satoshi, when he was describing all this stuff in his early writing, said, you could have something that's like worthless plastic, but if it had these qualities and was limited in amount, it could serve as currency. And we're seeing that with Bitcoin now. And before you respond, I want to also point out the idea of a stable currency is a little bit of a myth, because at any one moment, the price of oranges may go up and the price of apples may go down. So you're never going to.
But if your currency is represented by gold, apples, Bitcoin, Ethereum, US dollar, euros, yen, yuan, Australian dollars, Brazilian real, and the price of lumber, price of coffee, price of frozen concentrated orange juice, all of that was sitting in that treasury pool, if you think about it that way, all of it. And you were looking at the gross value of the whole thing at any point in time and over time at a time series event, you would find that the value per unit that you've issued would fluctuate almost not at all.
Now, when you, under your theory, when new value is created, is new currency emitted so that the amount of currency?
Yes.
Okay.
Matches the current exchange rate based on the value of the treasury. Yes.
Next big concept. Next big concept. Okay. I think that the U.S. government right now, because I think fiat is dead, and I think that that Elon Musk is said it all when he talked about the inevitability. Resistance is futile, right? So to go back to the Star Trek for you, Gordon.
You just appreciate it.
So how about if the U.S. government forked Bitcoin and built into it accountability and all the rules they wanted and let it free, so that we get rid of the political nature of money, but allow them to have the control factor. Because what the government really wants is to control what you're doing and have knowledge so they can tax you and have the ability to limit your activities, right?
That's only one side.
I'm sorry.
The other side is they want to be able to control. They want to be able to control the amount of flowing capital they have in their market that they can play with.
But let's say they acknowledge that they have to let go of that. They're losing the battle, right?
Good luck.
Ledger. Well, they are losing the battle, whether you want to face it or not. They're losing the battle.
Yeah, they don't, do they?
but at some point, you come to that moment where you realize it's an existential problem, and you either have to get your boat into the river or watch the river flow by without you, right? And so I think that moment's coming really fast. I mean, if you look at how Washington is spinning out of control right now with these nitwits on the floor wanting to carry guns, and the Democrats wearing, bulletproof vests, and people spouting, meeting with Trump in Florida to talk about the future of the Republican Party. I mean, things are spinning out of control pretty quickly right now, and they could restabilize, yes, or it could be a new equilibrium, yes, or this could really end up being a really interesting period of history. And I think that we can't have our currency, we can't have that unit of account, as a subject to, and being a dependent variable on all this bullshit. I don't think humanity will put up with it. So I think that there's a moment is here. David?
Yeah, I would just say more important than the drama and shenanigans between the parties, which is it's always there. It's we just need another couple of $1 trillion. We just need 4 more trillion. No. We just need 20 trillion more dollars. Like, you can only play that game so fast and so long before, you know, sort of the emperor has no clothes. It's obvious to everyone that, you know, this system is not sustainable. It doesn't make any sense. And people can see the prices going up in the grocery store. They can see the prices going up in everyday life. They don't need an economist to tell them the consumer price index rose, you know, 5% or whatever. They know things are getting more expensive quickly, and they don't have a lot of options other than crypto, right? Which all of a sudden they have access to, right? There are enough rails and bridges and, you know, gateways at this point to get into the crypto ecosystem for tens of millions of people, and they're taking that option, right? Because I think politics is largely nonsense, and it's toxic drama, you know, and you know that's not the important part, right? I'm sure there was lots of toxic drama in the Soviet days, but what really mattered is they ran out of money, and when you can't pay your soldiers anymore, they don't really feel like holding the line and guarding that border, you know, between East and West Germany. Like that's the end game. Like, nobody invaded the Soviet Union; they just went broke, right? And that is what's going to happen here in the next 10 years, the next 20 years, whatever time frame we're on. We're 1% of the way right there, right? We're at 1 trillion out of $100 trillion has been transferred onto blockchains, right? And we've seen a doubling or tripling every year in adoption and value flowing in over time, right? And you take that to its logical conclusion, and you're going to see all of the value get sucked into these new systems. And as long as it's open source and free, and there is no central party dictating, you know, the emission, as long as it stays true on that subject, then they're just going to go broke. That's what's going to happen. It's going to look exactly like the collapse of the Soviet Union. They'll talk a lot, and then they'll be broke, and everybody will turn around and, well, all of our money's over here anyway, so, you know, we had an alternative.
And this was the thing this is what I was getting to with this concept of this model where you have this treasury that contains anything, and that the token issued against it is specific, algorithmically, always the same, never changes, a unit of that treasury. And as the treasury grows, the number of units grows. As the treasury shrinks, the number of units shrink. But if following your logic there, David, if you start moving everything from USD, which is already in this treasury, into Bitcoin, which is in this treasury, if you think about it from that perspective, then at some point in time, as you say, the amount of USD in that treasury will be rather small compared to the other assets that are in there. Well, what happens, and I've done the stress testing on this model, you can literally devalue an entire currency from that model. And when that currency devalues, the net impact on the currency that's overlaying them, right, this global guaranteed unit, you lose 10% of your treasury, and you have an 8% effect on the coin.
But I'm curious,
so
Gordon,
amazing.
Or rather, I'm curious, Marco, why would you even include a liability like a currency? You know, they're not,
because you have to allow people to come in. Yeah, but you have to allow people to come in however they can come in, right? Initially. Obviously, down the road, you get rid of it.
I don't know if you do. I think I would only include honest money. And if they want to, they will buy honest money. And that comes in lots of forms. Like, I'm not a maximalist. They want to put it in Ether. They want to put in Bitcoin. They want to put in, you know, whatever it is. But I think you have to have real assets and not liabilities, because if you add liabilities to pool, you're just adding a time bomb.
Yes and no, but you're okay because the system's built to handle time bombs.
But what's the upside? I think he's asking. What upside overweighs the downside?
Hey, we included this asset that's going to only lose 5 to 10% of value per year every year.
What are you talking about? Oh, I see what you're saying. No, but that's okay. Because when the currency but the currency is still an asset, right? I mean, let's be honest. I think we had this discussion earlier. Currencies are assets because they are effectively stock in a country.
Maybe, but
because it's controlled by the country.
They literally have. All right, well, it's a guaranteed depreciating asset. If
it's only an asset. I mean, it's an object that you can take legal title to and transfer. That has value to someone.
They used to literally have on you know, redeemable for X, right? They don't have that on there anymore, right? It's no longer something you can redeem for anything. But yes, okay, right. It's a guaranteed, depreciating asset. I just don't know why you bother including it, right? I mean, like, even
you include it because
said,
it's something that people have. The human race, right, has currency of some kind, right? Some people don't have very much of it, but they all have currency of some kind. That is how they amass, if you will, what wealth they can amass in terms of a currency value of that, right? So they're always benchmarking against the US dollar. Like, you don't walk around going, I've got 4 Bitcoin. No one knows what that means. Right? I've got 100K worth of Bitcoin. Now they know what you're talking about, right?
But that's going to change.
That's going to change. It's all going to change, but it hasn't changed yet.
All that means is you have local denominations in the UI. I don't know why you'd have to include the actual terrible asset in your basket of good assets. I'm just saying we can move on to other subjects, but I think you can achieve that effect with different methods.
Well, Dave, let me throw this to you. There's kind of an accelerationist argument. So I think one of the big reasons that Libra scared all the countries was they were losing control of their monetary policy, because if everyone was transacting in Libra and the fiat was just a gateway in and out, they couldn't devalue their currency. They began to lose the ability to do a Keynesian stimulus. Everyone's doing Keynesian stimulus right now. But
this is why Libra, now DM, has been neutered into a form that can only hold short-term government securities, government currencies, and has to make a currency-specific stablecoin for each of the major reserve currencies. So yes, I completely agree.
Which I think supports the argument that, look, if we want to threaten the ability of governments to devalue their currency because it screws everyone, or we want to interfere in their ability to do a Keynesian stimulus, there's an accelerationist argument for taking their worthless fiat and hoovering it up off the market, and so they can't dump like they used to. I'm not saying that completely outweighs the downside, but the more people
not to mention it also accelerates the feedback loop, right? Because now there's a system that is watching as currencies of any denomination flow in, or assets of any denomination flow in, and is getting constant real-time feedback on what the net real value of that currency is. So when the US government prints $1 trillion, the people who are smart trading in this thing will start devaluing the US dollar directly on this platform by moving their money out of it on this platform, right? And there will be a disparity between the bank-driven forex rates, which obviously have a bit of a what's called conflict of interest, shall we say, versus the global perspective value of the US dollar. And that will become apparent very quickly. And there will be initially people asking questions, people who don't know anybody. Why is the US dollar worth 50 cent euro there, but on the market it's worth $1.20? Right?
Can you imagine in Reddit in 2030, there's going to be a group called World Currency Bets, and there's going to be a grassroots retail swarm that's going to take down the central banks, and we're going to amass.
Oh, hell yeah.
Guys, how do you think George Soros became a billionaire? Right? I mean, this stuff is just fractals. It's already happening, right? All we're talking about is fractals more and more, because David started the conversation with honest money. And now Marco's talking about feedback loop being faster. So what's happening? So you have transparency. So you're forcing accountability. So what's happening is a new concept, a new sheriff has come to town that said, hey, wait a minute. What you've been told is the only way to do it isn't the only way to do it. Right? And if you would like to benchmark yourself in something other than dollars, because guess what? $1 today is not worth $1 tomorrow and ain't worth anywhere near $1 20 years ago, right? So stop listening to the lies they're telling you about the CPI and all the rest of the crap, right? And understand that if you want to protect yourself, you better get out of the dollar, and you got to be on the other side of the window looking in. Right? And so what we're talking about here is...
You almost have to get out of fiat, because so many fiat currencies are based on the dollar.
That's my point. My point is you have to get out of fiat, because fiat is not money. Money is not an asset. Money, as it's evolved, paying attention to Hayek again, over the last 400 years, is a political tool. Okay, it is not, yes, it's a unit of account, but it's forced on you as a unit of account, because if you use something else, I'm throwing you in jail. And you better tell me if it's more than $9,999, because you must be a drug runner, right? And don't touch Bitcoin because that's only for the mafia, right? I mean, all these things that they're coming up with, and the idea that the government is trying to protect the little guy, the government is trying to stay in power, right? And that's what money is about. Money is about, how do I pay the army, right? How do I maintain my borders?
It's keeping the Praetorians loyal until we can't.
Right. And so I agree with what David's saying, is that one day you wake up. Listen, humans don't realize something's happening until after it's over. That's a part of human nature. That's why I do emerging markets, because there's
it's also the ultimate deployment strategy, James. It's a deployment strategy everybody should use. Make it happen, and then let them find out about it.
But again, fractals. What do you think Wall Street is all about? Wall Street is all about getting your position and then manipulating the market to make it happen. That's what the Wall Street guys have done for the last 100 years. That's how J.P. Morgan became J.P. Morgan, right? Now, all of a sudden, Reddit guys want to take a position and make shit happen. And, oh my God, it's illegal. Cut them off, right? But they're just doing the same thing that Goldman Sachs did repetitively on a daily microsecond basis for the last 100 years, right? I mean, what do you think happened during the last financial crisis? Goldman Sachs screwed us, right? They went to the government and said they need to be repaid because they're going out of business. And then they forced the government through the courts to pay them back the same money that they already paid back. And they made a $10 billion double payment windfall by telling the government that they were too big to fail. Right. But the Redditor guys, they're too little and they're screwing up my system. And I'm about to buy my new house. So you better really stop them immediately. Right. And that's
I'm getting ready to buy my third vacation home. And how dare you?
So Gordon and Austin both want to talk about GameStop. So what the hell? Let's go down that path.
Please.
All right.
Let me frame it and I'll shut up. Talk about what it means for the markets in securities. Talk about what it means for money. Talk about what it means for decentralization. And then go.
So, let's start with the fact that this is only possible thanks to better and better communication and information access. I was day trading, when I was a kid, when I was 12 or 13, and, I didn't have much information to the access. I had early internet access, but there was no Reddit forum. There was no, some analysts being, posting interesting content. In those days, it was really, really limited. Now we're at a critical mass where people are getting their hands on the tools, as James is pointing out, that the big boys have had for a long time. And all of a sudden they're going, oh, we can play this game too, right? And honestly, it kind of feels more and more like that's sort of the new normal, is the world's waking up with a lot more context. It's in everything, right? When I was going through, back when I still thought politics was a thing in 2007, helping Ron Paul, get delegates in Louisiana, all of a sudden we were, the internet nerds, and we had dug out the rules and figured out how the party really worked, right? And that primary, that's non-binding. That doesn't mean anything. It's just for show. The real thing is the caucus. That's where all the delegates are selected. Guess what you should do, right? You should go all in on the caucus, right? And just by having that knowledge, all of a sudden, a bunch of internet nerds were getting, most of the votes in Louisiana. How the hell did they do that? And so it's all this same pattern that we're seeing play out. And now I look at the coverage in, 2019 of the primary process, and people are figuring out that this game is rigged, right, in all these ways, and they have a lot more view into that than people did in the past. So this is what's happening, is the crowd is waking up because they're getting access to this information the first time, and now they can act on it.
I mean, to talk about this stuff over and over again, like in 1997, when I was first forming PALcapital, I was sitting there, broke in my bathrobe, day trading on AOL and CompuServe, and I found this little stock called iOmega that the Wall Street had pushed down to 0.25 cents, and when they were sure it was going broke, but they made this little thing called the zip drive that took 100 floppy disks and put them onto one hard drive that had life and changed the way you dealt with the computer. And I was like, wow, this is the best thing since sliced bread. There's no way this isn't going to work. And I met these guys, Tom and David Gardner, who became the Motley Fools. I was actually one of the original 5 people talking to them before they formed the Motley Fool, right? And we went out and bought iOmega because we all agreed that this was the thing. And we actually did exactly what these Reddit guys are doing to iOmega. I bought it 25 cents and sold it $25. And then when it dropped to $10 and there was another short squeeze around the Jazz drive, which was 100 zip drives, we decided to do the same thing again, and we talked it up. And I bought options $15 out of the money and sold it at $63, right? And I bought an apartment on Fifth Avenue, right? And it was exactly the same thing as it's happening now. People are just recognizing the power they have, and that's what these distributed ledger concepts are about. That's what these new communities are about, and the new information systems are about, and ability to build community, and in that community to synthetically represent and even overtake the systems that are there controlling right now. And so, I just think this is the beginning.
Let me throw this out here. Let me integrate both your points. I think the tools are more widespread. The greed of these, I don't know if you want to call it greed. I mean, they had the right to do it, but my understanding is they shorted 120% of the possible float. So it was impossible for them.
Who's they?
Sorry, Melville Capital.
No, that was Melville Capital, yeah. Right. I mean, Gordon, you have to remember that you can actually get access to more than just what's tradable on the marketplace if you have special side agreements with existing shareholders to loan you their shares. So that's not really a big deal.
We're just going to make it short. Listen, guys, there's 100 times more gold traded than gold exists. If everyone pulled on their gold contracts today, there wouldn't be enough gold to go into the contracts.
Well, maybe that's our next move. I hear good things about silver.
Yeah, exactly.
Apparently,
I guess I was saying, to everyone's point, the tools are more democratized and available. The knowledge is more democratized and available, and the
collective action is more organized.
Yes, exactly.
And the ability to regulate and control is diminishing over time, whether people want to realize it or acknowledge it or not.
Yep. And by the way,
it took them 3 days to move from playing in the stock market to playing with Dogecoin. Like, that wasn't a long learning curve.
Well, that's one of my points is that what happened with the GameStop thing is basically.
Did you see, by the way, a few minutes ago that Robinhood is pausing cryptocurrency buys right now, and it's like,
right. Because what the action in GameStop did was legitimize crypto, right? Because once you lose the argument that there's a difference between stocks and crypto, then the slippery slope is like completely greased at that point.
It's like when Janet Yellen says Bitcoin is used for crime. I mean, the US dollar is the most used for crime on the planet. It's like, come on.
Bitcoin's the worst thing that you could possibly use for crime. There's a permanent record of your crime forever on a public ledger. Like, I think we learned that in 2013. Right. So
we're talking about
and let's also forget that the only country in the world that's a member of the OECD and does not fulfill FCA and FATF compliance regulations in general is the US.
Yet every other bank in every other country must comply, or else they lose their correspondent relationship. It's nice to be the hegemon. It was fun. I enjoyed growing up here. I'm going Swiss exodus as soon as I can manage it.
Yep.
For better or worse.
So these folks are going to discover Uniswap exists, and they are very quickly, and they're just going to get off of all these platforms. They're going to be censored because to make an unpopular opinion here, it's not actually Robinhood's fault. The truth is, they are a regulated entity, and somebody gave them a call and said, hey, do you want to keep your license? Because if you'd like to keep your license, you have to do this. And they don't have a choice. And it's because they're regulated.
This is Haft's theorem. Once you have a single point of contact with the regulated world, you must go all in. There's no such thing as gray area. Because if you have that single point of failure with relationship to the regulated world, you're going to have to make a binary choice at some point in time.
Which means they have a nice UI and a friendly interface, but they're a bank like any other. Right. And they're holding your custody, and they have to play by the hegemon's rules, right? So, it's fun to meme and, we took the mantle of Robinhood and for the little guy, but if the rules aren't written for the little guy, it doesn't matter. This is exactly what happened to Libra. Do you remember their 1.0 white paper and all their dreams of decentralization? And then the regulators came in and said, no. And you got Libra 2.0, which I guess is now Diem, and all of that went away. Known validators, we need, reports on all the financial information for every user. And oh yes, giving Facebook all of our financial data. What could possibly go wrong with mandating that be stored and held by them and third parties?
Which is why I can't
speak to that particular piece with when Zuckerberg announced Libra, I just laughed. It was the most ridiculous thing I'd ever seen. I swear to you to this day that he was basically just poking the nose of the government and saying, hey, I can pull this shit off. Pardon my French, but I just had to say it that way. Because he knew it would never happen. It would never happen because he asked permission.
Marco,
he asked permission, and he should have just done it and then let them argue about it later.
The way to do it, he had too much ego. The way to do that, and I agree, as soon as I read it, I knew it was never going to happen because it was ego, right? It should have been a Trojan horse. They should have introduced a unit of account on Facebook called the FB or whatever you want to call it. And it should have just been like a coupon that you can do stuff on. And then it should take over by percentage of the number of transactions happening on Facebook. And then overnight they should say, oh, it's a currency, right? And if they would have done it that way, it would have been unstoppable because you can't hurt the masses. One of the popular rules is you can't hurt the masses. You can't take the candy away from the kid. Right. And so once Facebook was able to give you a better deal than dollars, give you better interest rate than your bank, give you access to more products globally, and do all those things that you can't do in fiat, it'd be very hard for the governments to take that away. But they went with ego instead. And instead of doing a Trojan horse, they put it in the regulator's face, which was just plain dumb.
Well, that's also, if I can jump in, that's also a lot on David Marcus, who's the guy in charge of the Libra project. He came from PayPal. He had one of the original patents on this sort of transferable money, and his point with the regulators was, he said, we want to shape the regulatory environment. We want to proactively engage with you. I mean, I actually went to the Libra headquarters in Geneva. It's a co-working space that's owned by PayPal. Okay, there is actually no Libra at Libra. I kind of crashed it. What struck me about the Libra situation is Visa and MasterCard were originally part of the Libra Alliance, and then Diane Waters and another senator representative, I forget which one, sent Visa and MasterCard a letter saying, not only do we not want you to do this, we're offended that you're basing this in Switzerland, and if you do it, we're going to look at your other existing legal businesses with a much harsher look. And that, to me, is a kind of a moment like what's happening now with GameStop and Reddit. It's the extra regulatory, extra due process, direct exercise of power. And I saw this thing yesterday that really struck me. It's people who are poor in this country don't like it, but they'll accept it if they feel everyone's playing by the same rules. And if they're not poor, they kind of blame themselves because they think they're just temporarily embarrassed millionaires. Like, they're poor for the moment, but, it's a land of opportunity. We're all playing by the same rules. It's a meritocracy. You'll get it. When the rules get broken, like you can't buy GameStop, you can only sell. It's ridiculous because I remember in 2008 and before, shorting was banned temporarily because it was too much of a threat. Well, now going long is banned. Think about it. Going long is banned.
But Gordon, this is again the fractals thing, right? But this is, if it's not your keys, it's not your money, right? Once you enter into these regulated systems, you no longer control the rules. It's not algorithmic, it's political, right? So the idea that you could be in Argentina and one day they can tell you that everything except the first $10,000 in your bank account is no longer yours. You just, as a patriotic Argentinian, just gave it to your government, right? You're shorting GameStop and you're freaking brilliant and you just made $1 billion if you're that guy from Chewy, right? Mm-hmm. Can't touch that. Sorry, that goes back to Goldman, right? Well, so that's why you want that's where this whole idea of moving towards your keys, your money, and moving away from political capital and political money is so important to us as individuals, because until we do that, it's going to be the primary source of control over people.
So let me throw this out here. I think when we had reference currency, reference to an asset, whether it's gold or silver or something else, that was an inherent constraint on government and what it could do, which, not that government and politics was perfect. I don't quite have the David Johnston view on this, but I think it created invisible guide rails, because when resources are limited, you have to make intelligent decisions. You can't just print your way out of a problem, and raising taxes has political consequences. So I think that the sort of that system engendered honesty and trust, even if it wasn't perfect. I think the moment we went off the gold standard and we went to a Keynesian model, even when people mean well, and they might, the inherent disruption involved in Keynesianism and inflation ultimately renders every trustworthy system untrustworthy, because it's more economically efficient to have the government print money, give it to you, than to add value. And I think this is James, I'm not disagreeing with you, but I think there's an underlying tectonic shift in incentives when you go off a reference asset. So I think it's inevitable. I mean,
what I'm proposing here is that you don't pick a reference asset. You choose all assets as reference assets collectively.
Well, Marco, I actually had a question about that. I mean, are you imagining an index or sort of like a global trust that owns everything and issues tokens against that value?
A global decentralized trust that issues tokens against that value, yes.
Okay, and can you turn in your token in exchange for an asset? Or is it
any asset that's in the pool?
Say again?
Any asset that's in the pool. You can exchange your tokens for any assets that's in the pool at the current asset value of the pool.
I'm using a slightly different expression. Can you redeem your token from that global entity?
Yes.
In exchange for something?
Right. You could put in Bitcoin and pull out USD if you wished, or you could put in Bitcoin and pull out Ether, or you could put in a house and pull out Bitcoin.
So, yeah, I think it's an interesting concept, but I think it's very far away, if at all.
Well, forget being far away. I think at the end of the day, it's the final turn of the old system. I think the idea that we need to tether ourselves to physical things is going to be passé if it's not already. And that I think even if you just look at how humans are relating to the U.S. dollar. And to the fact that we don't really know how much gold there is in the world, but are still putting values on it and are letting it happen on a daily basis, shows you that psychologically we don't need that anymore. And so I think there'll be something called the credit.
I disagree. Well, I agree with you on the thing that will be called a credit, but I disagree that just because we don't know the net possible value of an asset means that asset has Marco, an ambiguous value.
Marco, once you get to the point where every asset in the world is being crammed into this decentralized thing, it in itself becomes an abstraction. It's like, in the back on when you get to the back of the circle,
yes.
right here and left
yes.
here, in the back you meet at the same place. David's the most right-wing person I know, and I'm the most left-wing person, and we have identical views on
David
everything.
is not the most right-wing person you know.
But
this is my point, James, is that this is how you transition into this thing. You take it from something everybody understands. I know my Bitcoin is worth something. I know my Ether is worth something. I know this is worth something. And you start there where people are dealing with things they know, going into something that they think they understand, right? Which is basically, this is an asset-backed treasury entity. When you get to the point where that overarching token, whatever you want to call it, is the primary basis for transactions, it becomes the money that people think of, right? They stop thinking in US dollars, they stop thinking in euros, and they start thinking in this asset token. That's the point, James, where you do a cut. You do a cut and you say, there's enough trade going on inside this thing that we can now value any given inbound asset into this ecosystem at a certain amount, and any outbound value going out at a certain amount. We no longer need to actually maintain the treasury.
I get it, but Marco, listen, I'm gonna break your heart. I had a law school professor, 30, 40 years ago at Judge Etheridge. He taught criminal law, and he was a Southern judge and at Emory University. And I got up to answer my question about something, and he says, James, don't tell me the law. I wrote the law. Tell me a story. Okay. And honestly, that's where the world is right now. No one gives a shit about the facts. No one cares about the algorithms. No one cares about how it works. They just want a story. And if the story doesn't even make sense, they don't give a shit. They're going to run around with a big flag and talk about the story. Right. And so I think that you have to start to extrapolate that to how people are going to perform around money and around exchange. And I think what you're really trying to do is get global confidence. It's not really about the underlying assets or how the mechanism, because when you get as abstract as you're talking, the human mind doesn't have the ability to understand what you're talking about. Some people can get further.
Are you calling me an alien?
Well, what I'm saying to you, I'm saying to you is it's like Dune, like everything's a plan within a plan within a plan. Only certain people can penetrate the onion in certain layers. And the truth is, when you get to the level of detail that you're talking about, no human being is able to penetrate that onion to the core. So you're losing, people, logarithmic numbers of people as you go down into it. And at some point, it's just like, well, it represents everything, just trade it, right? And then once it becomes there, it's like, well, just trade it. Forget even what the story is. It's just, a dollar is a dollar. Just shut up and keep trading the dollar. The trillion were printed yesterday, and it's, with fractional banking, that's 20 trillion. Oh my God, my mind stopped at 10,000. I can't even count up to 10,000. So,
Right.
So,
no, I agree with you. James, Gordon, you brought up a thing calling it an index. And I think that's how that's the story you tell people. The token is an index of value against a whole basket of assets. That means that when one asset goes up or down, your value doesn't fluctuate nearly as much. It's a stabilized unit of value. That means you're safer if you're in it than if you're not, in terms of preserving day-to-day value versus, investing and making money by buying into assets like Bitcoin or anything else, and so this becomes your basis.
It's a really important point, and you're kind of making my point, which is the only thing that makes it valuable is that other people value it, right?
Correct.
And how do you get to, so this all gets down to, we're going to end here because we got to jump.
Well, we got to do one more thing. I have to defend myself.
Okay, no.
Sorry.
This one is personal privilege, right? Like McCarthy?
If you ask people what's the new economy about, what's distributed ledger about, it's about consensus, right? So it's not so important about how you get there. It's important that you get it and that it's honest and that it's non-transmutable and that it's formed in a way which is algorithmic so people can understand it and use it for basis in the future. To me, that's, so what you're talking about, we're not disagreeing, Marco, what I'm saying to you is that what's important about it is not all the bells and whistles and levers, which are brilliant. What's important about it is reaching consensus and where are people lodging their vote in that consensus platform. David?
Right. So, having been called right wing, so here's the deal, guys.
So he said
all
right
of that,
James.
And he picks up on that James. One little word.
You're doing documents. The only thing people recognize is their own name. You should know that already.
So here's the thing: right and left don't exist. There are real people, and there's an imaginary state. And the reason that James and I agree on so many things is we both care about the real people.
Exactly.
We don't care about the imaginary
Exactly.
state.
Exactly.
The rest is just drama and politics and nonsense.
Exactly right.
So I look forward to moving into a world in which
I apologize and accept.
All good.
What's going to happen if we ever end up in the French situation where they have a right, a left center, a right center, a center, and I'm sure they're going to move into top and bottom and mid top and lower bottom.
It's just a drama to keep the populace involved in the story. There's nothing real there. All that really matters is the state wants power, right? And it's this imagined fiction of a state, and we have these ceremonies and we pledge our everlasting allegiance to this particular piece of flag that has this particular set of patterns, and it's nonsense. What I care about is people. Are we kind to them? Are we good to them? Are we honest with them?
Amen.
Are we treating with them with respect? Like, that's the whole thing.
We educate them and give them the tools to protect themselves, understanding that self-interest and aligning mutual interests is the key to happiness and success in the future.
Amen.
Okay. All right.
There you go.
I think it's time for like a group hug.
I love you guys. I got to run. I really, these DLT Fridays are so big, so much a great part of my week. Thank you, Gordon, for coming up with this idea with me. I love you, brother, and I appreciate it. And Marco and David, when I was struggling for, oh my God, it's Wednesday, what are we going to do? I reached out for two of my favorite people, and I really, really appreciate the conversation. As I say every week, DLT Fridays is about me having subjects that I'm interested in learning about and bringing those people who are smarter than me so I can sit back and learn. And this week was just as much, true as any other week, and I really appreciate it, guys. Thank you.
And I want to thank you guys also.
It's been a pleasure.
This is my last day in this house. I'm moving, and there's James asked me, "Are we doing?" Or Jane asked me, "Are we doing DLT Fridays this week on your time?" I said, "No, I don't, but we're doing it anyway."
Exactly. That's exactly what happened to us. All right, love you guys. Ciao.
All right.
Ciao.
Thanks, everybody.
Honored to be considered, and thanks for putting up with me.
You're the best. Now, Marco.